Hi traders and welcome to the technical analysis market wrap on the 16th of April. So I've seen some pretty good moves this week. Some of the majors have definitely broken out of their zones and the US dollar index was fairly weak, which had a pretty big impact on a couple of these pairs. So we'll jump straight in and see if we can identify any opportunities for today or early into next week. So we'll start out here with the Aussie USD, we'll move over to a daily chart and we'll have a look at what has happened here. We can see that we had that consolidation of this price around the neckline of what should have been a head and shoulders. It failed to break, and we knew that it was a pretty strong zone. I know we've talked about this before. We knew that it was a very strong zone, and it didn't break it, so it never got us into the trade. But it has consequently broken up to the upside, broken past those moving averages, and well and truly, closed above them. The only issue for this trade now is that any movement forward is going to be found at this level here with this resistance right in your face. So it's currently 30 pips away from that resistance, so we have got a little bit of an issue not very far in front. And the problem with a 30 pip range is that there's not much room for error, and that's why I don't really like these trades in the first instance. It's a bit more of a wait and see on this one, because realistically it's probably a better shorting opportunity if it gets up at around those levels, because there's a lot more movement down. What you want to do is look for very clear areas of movement. That's what you're looking for, that is not going to be obstructed by resistance right in your face. So if you entered right now and you are only going for that 30 pips, the problem with that, of course, is that you're going to require a fairly big stop loss. You're not even going to get a 1-to-1 on that trade, so better to leave that one alone. The opportunity is really in the smaller time frames if it gets up here. So you can see, we'll go to a 1 hour chart. If we get price movement all the way up to the 78 or even the 77.80, that zone, if we get a lightning bolt effect on a 1 hour or a 15-minute chart, you can start looking at potential shorting opportunities back into the zone, which is around this level here. The next level test should be at around that 76 sort of 60 area, which is a pretty reasonable move. You can definitely get a handful of pips out of that one with a relatively stable stop loss, not too big. So your risk rewards would be quite good on that one. So that's probably the preferred trade. I think the long is already gone now. Just look for a pullback to the 20 moving average or to this level, and I think that will potentially get you a reasonable move up off that level. It really opens itself up if it comes down. So you've got the trade on the way down to this level, and then you've got another potential trade on the way up if it is going to indeed break to new highs. So one to watch. Probably more scalping than anything else on this one, but just be mindful of the long. If you are going long on this one, that there is very, very strong resistance in front of it, and it might take a little bit of breaking. All right, we'll move over to the US dollar CAD now. Now, this has been an interesting one. This has been probably the stronger of the US dollar-based pairs, and you'll see what I mean in a minute, because even though it's had a crack at breaking this zone here, which is around that sort of 126, sort of 20 area, you can see that it was very, very strong support through here, support there, and support there, and then it's been resistance for at least several days over an amount of weeks here, probably about, well, since early March really, has failed to break through. We've got the trend line going down there as well. We've got the moving averages, 50 moving average. There's a lot of trouble there, and it's failed to break. You can see it tried there a couple of days ago, sold off quite heavily. But although it has sold off, it hasn't pushed down anywhere near as much as the other US dollar-based pairs. So this is actually still showing more strength than the others. MACD is still certainly in its favor. We know that this is a very, very key zone. That 125 to 123.50 area on the US dollar CAD has had support for many, many years. Like, we can go to a monthly chart and see that. So we know, we've already talked about this, we know this is a very, very strong level of support for it. So it's going to be a very compelling story if it breaks that level. So this is probably why it's showing the strength. So, for mine though, it has to clear this level now. I'm reluctant to take the short, mainly because I know it's very strong support down here, but the long opportunities are only if you get a daily close above this level here. So you need to get a daily close above the 126.30 area to clear all this noise. You've got to clear these previous highs, the roll reversal, the trend line, and all the moving averages. If you can get that to happen, you can rest assured you'd have a 4-hour change of trend. You'll have the moving averages in your favor. You'd have the higher highs and higher low sequences in your favor on a 4-hour, which is very, very significant. And then, of course, it opens itself all the way up to the 128 and 128.50, which is a pretty good move. So although it's still several hundred pips away from being a really, really good trade, you can position yourself to actually take a couple of scalps in between and then look for the breaks. But what you'll lose in pips, you're going to gain in momentum, because if the market gets up there and closes the daily above it, you're going to have a lot of momentum on your side at that point, and that should push it higher to these levels here, which will give you some far better trades than having a stab at what's going on now. At the moment, the 20 is holding it up, so it's a very difficult one to trade at the moment, but definitely set your alerts for this level here at around the 126.30. All right, we'll move on to the US dollar yen now. This is the one that I'm talking about in terms of, you can see the sell-off is very, very aggressive. So compared to what the US dollar CAD did, you can see that this has been a very, very big sell-off from the highs that we predicted a little while ago now. It seems quite a long time ago that we were looking at that 110.50 for a target. It sold off very, very heavily there. And when it does move up that quickly, sometimes this is what happens. It comes down just as fast. And that's why it's not an ideal trade when the market's moving at very, very volatile levels. It's very hard to predict what it's going to do. And then when it does pull back, the pullbacks are very, very aggressive. So you've got to be quite careful there. A good way to trade this, I was talking about this last night, is mark up the area that has been previous resistance and support. You can see that right through here. This has been a pretty good level. That was a good level for several weeks. If you actually draw this little box and box up this level here, you'll see that it matches what's going on here. So what we're trying to do is trap price in between the current support level and the resistance level around that 20 moving average. So we're looking for a good consolidation of price around this zone. And if you go to a smaller time frame, you'll be able to see that play out. You can see here, go to a 15-minute chart, the rectangle gives you a very good indication of what you're looking for. You're looking for changes of trend on a 15-minute chart, pullbacks to the 20, going up or going down. You've got your targets well and truly defined. So you can scalp this one until the daily does what it needs to do, which is either consolidate around this level and push up a little bit higher, or indeed break down lower. The ideal trade is for it to actually stay in this zone for a little while and find its feet again, get a little bit of consolidation, because that will make far more sense from a technical analysis standpoint. All right, we'll move over to the dollar index now. This has been basically in free fall as well. You can see here that it broke through the 92.20 and the 92 area like it was nothing. It stuck there for a couple of days, but realistically it didn't hold. The 20 moving average failed to hold it as well. It was a very strong level, but it has been broken. Now we've pushed down past the 50 moving average as well. It's literally on its last line of defense now. So you can see here around this 91 sort of call it 60 area, like the 60 is probably the real support. You can see that it's been resistance here, support over here. This level is very, very important. I don't need to say that, you can probably see it. If it breaks higher and above the 20 moving average, again, we'd be looking for maybe some sort of consolidation around the 92. But the problem is now it's going to find trouble at the 92 again. Now that it broke through it, when it gets back up there, it's going to have all this resistance in front of it. Okay, so it's a difficult trade now. You don't really, if it falls from here and actually closes lower again past this zone, it really opens itself up to the lower 90s, and that is a little bit of a problem. So you definitely, ideally, we want to see consolidation around this level and then maybe push up and test this level. If we get to the 20 again and test a roll reversal from the bottom, I think it gives us a good opportunity to maybe get involved in some shorts if we get a lightning bolt change of trend on a smaller time frame, which is the ideal scenario for this particular trade. Okay, so the next one we'll have a look at is basically the inverse of the dollar index, which is the Euro USD. You can see that this has actually mimicked the big move that the dollar index had on the way down. We're effectively expecting the same thing to happen here, though. Like, obviously, we're in a very, very strong point of resistance. You can see that right through here on a daily chart. It was support here, resistance here. So we don't expect that it's going to be blasting through this anytime soon without some sort of a pullback that is meaningful at the very least. And that pullback would be to around this sort of 118.90 to 119 level. That would be ideal. If it pulled back down to here, the 119 is obviously a very strong roll reversal zone. We've also got the 20 moving average down there. That could come back pretty quickly, especially if we get a decent fall. We go to the smaller time frames. The ideal trade here is to probably look for shorting opportunities around this level. You know the target we're aiming for on the daily. So what we're looking for is a change of trend on a 1 hour. If we get a series of lower highs and lower lows, that will push price down below the moving averages, and it gives us a very clear target to aim for. Okay, so this has been a pretty good trade. What we need to happen though is we need markets momentum to start kicking in for us before we actually get involved in trading this one. Okay, so what we want to see is a series of lower highs and lower lows, and we know we can trade it into the 119 level, which is marked on the daily, which is a very strong roll reversal zone, and that coincides with a little bit more weakness in the it's the weakness in the euro, but the strength in the dollar index, and that means the dollar index is going to be going back up to this level here. Both will be ideal scenarios and really, really good for the euro. And if one does that movement, the other one will most certainly do it as well, because they both rely on each other. All right, we will go to the spot crude now. We'll go to the daily first. We'll have a look. This is the one we've been talking about for a few weeks. We had that price consolidation in between the two moving averages. You can see the squeeze, the 20 and the 50 were squeezing down on price and locking it in. We expected a break either way. We weren't fussed either way. You can see the target down here was 54 if it broke down, and the target is clearly the previous high if it breaks up, which it did. So what we're looking for now is probably a price movement back down to the 20 moving average to get involved in this trade, or it may continue up. Now, if you're looking for the long to try and get it back to the $67 mark, you need to go to the smaller time frames, look for the pullbacks to the 20 moving average. When it does that, that might give you your entry point. My preferred trade here would see a little bit of weakness back down to the 20, not too much. I'd like to see it test these levels again, the ones that were producing resistance earlier. If it gets around there and rests on the 20 again, I think that could give us a really good opportunity to take it long and potentially push to the previous highs here of around that 67. So been a pretty good trade. Hopefully you're able to get involved in that. Like I said, go to the smaller time frames if you want to look for the entry points, pullbacks to the 20, but ideally it probably wants to come back just a little bit more first before it has one big push up to the 67. All right, the last one we'll have a look at is the S&P 500. This is basically setting new highs on a daily basis now. We're in the middle of the US reporting season, so of course a lot of that is fundamental based now. Technicals aren't really playing as much of a role as fundamentals are and reporting is, and you've got to take all longs now with a great deal of caution, because you've got to remember this has never been here at this level before. So because it's in uncharted territory, literally every move is a new resistance point. Okay, so, and there's a lot of anticipation. I did warn a couple of weeks ago that if it did break the 4,000, a lot of stop losses were going to get taken out because a lot of people thought it wouldn't go much past it. But these have a real thing about breaking a level and then breaking an all-time high level and then really blasting past it to make sure they wipe everybody out. And it did just that. You know, it pushed basically 150 pips past a level that everyone thought was going to be very strong resistance. So that's what you've got to be mindful of. Just remember now that every move up is going to be coiled with a lot of resistance because it's set at an all-time high. The preferred trade is probably just scalping the pullbacks now, scalping the pullbacks to the 20 moving average on the smaller time frames, and then maybe getting involved in the long. The ideal scenario here would be to see a bit of a pullback now to this level, back around to that sort of 39, sort of 50 area to 4,000. A pullback down there would be quite healthy, really. It'd be a good way to actually get involved in a potential continuation of this long. But for me, I would be looking for a little bit of weakness at all of these levels, but it must come with a change of trend. I wouldn't be taking any shorts unless I had a significant change of trend, which is a lower high and a lower low sequence on a 1 hour or a 4 hour chart. So I hope everybody's had a great week's trading. We've had some really good opportunities and the markets have been quite kind on the movement front and from a technical standpoint. So hopefully you're able to get involved in that, and I look forward to a good week of trading next week to see how these moves play out. Hope everybody has a great weekend, and I look forward to seeing you all next week.